You're watching BCTV. We're all about Brantford. You're watching BCTV, Brantford Government Television, a service of Brantford Community Television. This program is brought to you in part through the support of the town of Brantford.
Okay, we're going to get started for Town of Brantford Board of Finance regular meeting, May 24th, 2021. First on the agenda is to approve minutes of the February 22nd, March 22nd, and March 23rd to 2021 meetings.
I'll make a motion to approve all three. I read through them, Joe, and they look fine to me.
Second, Joe.
Motion's been made by Charlie, seconded by Jeff. Discussion, all in favor?
Aye.
Aye. Okay, next on the agenda is citizens' comments. I have a taker, Mr. Cook. You come over to this podium there. If you go to the podium, you should be, there should be a camera on you. That's, I think, what the...
I put it on the ground. Can you pick it up there?
Yeah, that's fine. Wherever you want to put it. Now, Wayne, again, you know, we're on a time clock here, so...
You got 10 minutes, right?
10 minutes max, yes.
Okay, well, I don't think I'll get anywhere near that. Concerned about item number 8, the overrun for the animal shelter. As you see, and I handed you all out the concerns so you won't forget them. It seems to me that this is moving in a wrong direction. The citizens were not aware, at least I wasn't aware, and I keep pretty close tabs of things, about this overrun until just recently. And next thing you know, it's on your agenda. And I don't understand how that happens before we even have a chance to study the information and, you know, where the overrun came from. So what I asked for today under FOIA, I asked Trista for an analysis of the itemized cost and also for all the bid information, which I think, quite frankly, you should see if you haven't seen it already before you can do anything on this item. So that was first. Where are those, and why haven't we seen them yet? Another thing that concerns me is why wasn't the 1.6, I can think it's closer to $1.7 million increase mentioned at all at the budget hearings? I mean, Laura, the director, stood up here. She spoke to the shelter. Was this some kind of surprise that happened in the last 2 weeks? Or did somebody see this coming? Because somebody should have seen this coming. I mean, this is no small increase. The other thing that concerns me is this public input that, well, I personally asked, and other people did too, about the green element of this building and how much was going to be, you know, the solar and whatever, and nobody said anything. And then all of a sudden there was a meeting tonight of the Brantford Clean Energy, and they said this whole building is going to be a flagship solar building. Well, where did that come from? Because nobody told us. And now all of a sudden, and you know solar is controversial. I mean, some people think it's great, some people think it's certainly not so great. So where did that come from? And you know, and quite honestly, and I call them this to themselves, is this another product of Brantford's green cult? And I've said that publicly many, many times. And it's clear they have a relationship with the first selectman. I mean, he gives them everything that they want, whether it's Tabor or committees or plans or whatever. So is this another example, quite frankly, and I'm just putting it out there, of this building becoming solar because this green cult wants it? And again, as I said earlier, why is this even on your agenda? I don't know. Because quite honestly, nobody that I know who has an interest in this has seen the information, and I think we should. And then to finish up, you know, is this, and I'm going to be honest, is this another dishonest project, in my opinion, like the community house, which a lot of that information was withheld. It was kept from the public. There were, quite frankly, in my opinion, lies that were told. And is this another one of those? Because that community house is a disgrace when it comes to the amount that this town spent on that for what we got. $13 million for that building? because nobody could really participate because the decision was made in town hall, period. That was it. And then the question becomes too, and I'll close on this, what are the other costs and favors in this project? What other promises has the first selectman made to the Green Cult and others about what they're going to get that we don't know about? These are all very legitimate concerns, and all you know me, and I do my homework, and I just think before you vote on anything tonight, or even the next meeting, we have a right as citizens to at least see the information. Thank you.
Thank you, Dwayne. Are there any other comments from the public, citizens' comments under this section? Okay. If not, we'll move on to agenda item number 3, which is number 3, 4, and 5 are presentations from the Andriel Group and GYL Financial Synergies with regards to the Police Pension Fund, the Volunteer Fire Plan, and the other Post-Employment Benefits Trust. Gentlemen. Good evening.
Good evening. So as customary, myself from the Andriel Group, Robert DeLuca, and Luke from GYL will provide an update for you on the police pension, followed by the fire pension, followed by the OPEB. I'll precede those with some comments about the overall markets and economy to set a good backdrop as to what the experience of the funds were and to provide some basic good understanding and attribution of the details.
Thank you.
So the period that we're going to be reporting on specifically, as we'll go through in the booklets, is the period ending March 31, 2021, the first quarter of the year. And I'll also provide some additional detail that brings that relevant to the current day. So in the first quarter of the year, the equity markets continued a strong advance that we saw in the last half of last year, led by small U.S. companies, followed by mid and large, where we saw small companies up about almost 13% for the first quarter, and mid trailing that, and then large. Large U.S. companies up about 6% on the quarter. And then when we looked at the international markets, we saw the developed international markets up about 3.5%, and the emerging markets or the developing economies up a little bit over 2%. So U.S. markets and the U.S. economy is clearly leading the global stage in this environment. And on a year-to-date basis, as we flash this forward to today, we see continued strength in leadership from those small and mid U.S. companies, with those small and mid companies being up 13, 17% year-to-date, respectively, and large companies being up almost 12% year-to-date. Developed international economies have narrowed the margin to U.S., with developed international up about 9.5%. But the emerging markets continuing to lag up about 3.5% on a year-to-date basis. Alongside of that, we've seen quite a bit of volatility in the fixed income markets, as we've seen interest rates in the first quarter of the year continue to rise. And that led to negative performance in the broad U.S. bond market, where we saw the bond market down almost 3.5% in the first quarter. And as the year has gone on, we've seen that loss decrease a little bit, so the U.S. bond market's down a little bit over 2% year-to-date. So, and that was something we talked about at the last board meeting, is the rise in interest rates and the expected continued raise of longer-term rates was going to be a headwind for the fixed income portion of the portfolios on a short-term basis. On a broad economic level, we're seeing strong gross domestic product data and a strong expectation for the 2021 GDP numbers to be significantly higher than 2020 for all of the obvious reasons that we've experienced and see day to day. So there's going to be a lot of attention paid to the second quarter GDP numbers, which are forecast currently to come in at about 12.8% year over year. As you stretch that out for the full year of 2021, the GDP estimate has increased from the high 4s to now about 6.5% for the year. So a strong year for economic growth domestically. And the forecast we're seeing forward beyond there is for that growth to start to temper and moderate in 2022 and further moderate in 2023 back towards a more normal growth rate in the mid 2% range. So we are seeing some signs of what is types of inflation related to increasing growth. And there's quite an academic debate that will persist near term about if this inflationary period is transitory or if it's a little bit more systemic. It's a little bit too early to tell the duration of the inflation. What I mean by that is we've seen a rise in a number of goods and services and a lot of commodity price increases, from everything from gasoline and oil to base materials and core commodity inputs. And how that's going to flow through the system is still to be determined. You know, and as some of you know, there's other big shortages globally due to a lot of the disruptions from coronavirus that still have not worked through the system. And with regards to coronavirus, obviously we're seeing, as we're sitting here tonight, and fortunately, you know, we're able to be here together in person without masks, as we've been, all of us here have been progressing through the vaccination process, obviously. So we're seeing, you know, when in excess of 60% of the American population of the adult age has at least had their first dose administered at this point. Locally, that number is higher, which is wonderful. And that is all part of the process in taking strides towards a return towards, you know, what is normal. Normal is a hard thing to define always, but, you know, reverting back to an environment and society functioning a little bit more open. So we're seeing strong progress there, you know, here in the U.S. However, at the same time, we're still seeing other material issues with coronavirus in other economies and countries. India is the most notable. So that has obviously, all throughout this, has caused massive volatility throughout the stock and bond markets, which has led to where we are today. On a valuation basis, based on how earnings are expected to expand, we see that valuations on equities, while they're slightly above average, as you look at the expanding earnings, they're starting to price a little bit more towards normalcy. And we're also seeing the market starting to price in an increasing level of dividends. So more cash flow to be returned to shareholders. And that leads us to, you know, my next comment is really just employment data. It goes back to the underlying economic information. The unemployment rate has continued to come down faster than expected. So we now have an unemployment rate at roughly 6.1%. Granted, it did tick up 0.1% last month. The trajectory on that is to see the unemployment rate continue to decline to south of 5.5%, hopefully by the end of 2021. So if those types of things should hold through, we expect to see the Federal Reserve to be in the spotlight as we get into the tail of this year to how they will address the inflation issues and employment progressing towards full employment by their definition, and a strong expanding economy. So the Fed has a large balance sheet that they've taken on to be stimulative and accommodative to this market and society. So should they start to taper that portfolio down, and we've had this conversation before in past cycles, so should the Fed start to taper their balance sheet, will be one of the first indicators of a strong confidence of the stability in the economy. And then that would then be followed by when will the Fed raise interest rates? And the market at this point is expecting the Federal Reserve to have their first interest rate hike in 2023, which seems like a long way from today, but that's really just over a year away, a year and a half away. So what that means, we'll find out as we get closer and as more and more data becomes available. So with that, I'm going to transition over to Luke for him to take us through the experience of the funds. And as customary, we'll start on the police pension.
Thanks, Robert. Luke.
Good evening, all. If I could have you turn to page 19 of the Town of Brantford Police Pension Plan. Start there. In usual fashion, I'm going to cover some of the broad overview of the risk return statistics for the plan. You could see there in the top right summary, return summary statistics, number of periods now at 216 months. So now we have compiled 18 years worth of data for this plan, so quite meaningful. A few line items down, you'll see that annualized return figure of 6.09 versus that of 6.17. So we've been able to achieve an annualized return just north of 6%. And with that, we've been able to achieve that rate of return with a beta of 0.92 or 8% less volatility than that of the overall markets. That's further evidenced by your risk metric or your annualized standard deviation at 7.54 versus the policy of 8.16. And with that, we've gained a little slightly positive risk-adjusted return or alpha of 0.03. Putting the experience of the plan for the first quarter into dollars and cents, if you look at the summary of cash flow table below, you can see at the far left, the last 3 months column, beginning January 1st, we had a plan market value of $28,355,029. Disregarding the contributions and withdrawals that contemplates not only benefit payments, but internal money movement through rebalancing. We had a net cash flow or withdrawal of $487,147. However, a net investment change of $958,189, bringing you to an ending market value of $28,826,072 for the period ending March 31st. If we pan from left to right, you can see over the longer time periods, most notably your fiscal year to date earnings or net investment change north of 4.4 million. But more noticeably is the 1 year number. Being that we witnessed the low of the market back on March 23rd, that date has now fallen off of the 1 year number. So you can see there earnings of $7,151,032. And then dating back to the inception of the plan of April of 2003, we have a net investment change just shy of $19,800,000. So with that, if there are no questions, we could flip to page 15.
Any questions on the police pension? We'll talk about the rebalancing later. Okay.
So on page 15, we could see the summary of the plan for that period, not only at the total plan level, but at the underlying asset class level as well. You could see for the prior 3 months, ending March 31st, we had a positive experience and a bit of outperformance of a positive 3.41 versus the policy of 3.14. The fiscal year to date, positive 17.75 versus positive 17.92. The 1 year number, positive 31.81 versus positive 34.32. And then over the longer time periods, you can see as that gap slowly closes, dating back to the inception of the 6.09 versus 6.17. The police plan still holds an allocation of 55% to equities, 45% to fixed income, which is made up of core fixed income, high yield bonds, and a cash component. You can see at the underlying asset class level, as Rob alluded to in his opening remarks, the equity portion of the portfolio really carried this quarter as we saw quite a bit of pressure in the fixed income markets. So as we saw a little spike in interest rates, I believe the 10-year started the year at about 93 basis points. Throughout that 9-year period ending March 31st, the 10-year Treasury was about at 1.74. So we saw an advance of about 80 basis points on the 10-year note. And as interest rates rise, they cause some pressure on the bond prices. And as you may be aware, the town has embraced a high credit quality standard, not only in your core fixed income, but also in the high yield component. So the high yield mandate, which is managed by Mainstay High Yield, has exposure to CCC bonds. Those bonds were compensated a little better, hence they trail the underlying benchmark for the nearest quarter. But by and large, the portfolio had a great quarter. We're seeing strong quarterly earnings from corporations as they earmark their first 90 days. And to date, the plan has continued to stay on a positive track, not including the advance in the markets today, but as of the close of business on Friday, the police pension had a market value of $29,523,463. This equated to a market value change of $697,392 quarter to date, which is approximately a positive return of 2.4% since March 31st through Friday's close. Any questions as it pertains to the underlying performance or funds?
The portfolio, is that 55% equities, 10% cash?
No, so it's 55% in equities, and there's a makeup of individual asset classes. When it comes to the 45%, which is your fixed income bucket,
Okay.
there's about 35% in the core fixed income, which is managed by Mesirow. 7.5% is in the high yield mandate, and as of now, we have a cash policy of 3%.
Okay.
That's to maintain benefit payments. So, and if you ever need to reference just a way of navigation, towards the back of the report shows the historical policies, so we'll actually show you all the weights of the underlying assets for the equities as well.
Question?
Questions? Sure.
If we can just discuss maybe an assumption that we're going to get a major market correction somewhere, do you think that the policy we have a 3% cash may be a problem with a major correction in terms of payouts, dividends, or income streams you're going to be looking at?
So,
It's forecasting.
Yes.
What are your thoughts on forecasting?
well, as the pension has a very long time horizon, we do take that, we do have to keep balance of those two perspectives of what happens short-term and long-term objective. So we are very alert to the fact that we've had a market that's advanced with very little volatility on a short-term basis. And the likelihood that we could see a market correction or a market event, it will always be there. As you look at that and the work we do quarter to quarter with you and working very closely with Mr. Finch as the Director of Finance, is to determine how do we make those little tweaks specifically with regards to how we handle contributions as they come in, and how we will make sure there's cash parked aside to always be able to maintain and manage all of the benefit payments, so that we can withstand any type of volatility that the market brings to us, which is why we were able to withstand last year's whipsaw market, where we saw the equity markets decline in the order of 35% in a matter of weeks, but it didn't interrupt or impact any of the funds that we're consulting on for the town of Brantford, because we had those cash payments already reserved aside. And so there will be periods of time where that 3% cash number will be higher than 3% because we will have put excess money aside, as for example, the contribution that will come in July. As we review that with Mr. Finch in the summer and as we present to you in August, will be very specific recommendations about how that contribution is utilized for expected benefit payments, and also for where is it appropriate to insert that into the portfolio, if at all, at that point. But we're not going to try to guess when the market might have a major event. But that's why we try to take care of your pensioners very specifically, though, by having that cash aside.
Well, what are your thoughts, and agree or disagree, on the fact that the indicators are looking for that change? I mean, we've got the leveraging going on in the markets. We've got real estate values overpriced. We've got inflation sneaking up a little bit. And we still have employment problems with the government supporting people not working. So, those aren't positive market indicators to see.
They present a host of challenges.
I know.
And in consideration of time, I'd rather have that as a individual conversation because it's, you know, there's the work product here is to drive that allocation longer term and to come back to Mr. Finch with, this is how we can make adjustments. Please, Jim.
Yeah, the other thing that's, and I certainly appreciate that question too, because I think when we, many years ago when we started constructing the portfolio, one of the things that we looked at was an asset liability equation. And the thinking was really to identify risk as well. You had mentioned cash for future payments, et cetera. The approach at one time was we were immunizing, I think, close to 8 or 9 years worth of liabilities in our fixed income. And then with some of the other asset allocation changes where we've increased on equities, I think we're down to roughly about a 6-year duration, between 6 and 7 on the liability. So in a way, that's how the portfolio is positioned to make those payments. If you were an individual, for example, many folks are familiar with the bucket strategy. So you look out and you say, okay, a retiree needs 6 years worth of payments. So let's say that number is $40,000 a year. Then they would basically, you know, keep $240,000 in those fixed income investments to basically be available to meet those withdrawals. So that's another aspect of the strategy is the allocation. Now, some pension plans look at it a little bit differently. Some are more on a total return basis, and others, to I think where your question goes, Harry, is typically more in line with tactical allocations. So in other words, you kind of have a core allocation, but then you make some educated bets on where the market's going, and you do that appropriately. So there are, as I understand it from a layperson's perspective, there are a couple of different approaches. This board has historically gone with the asset allocation based on immunizing liabilities and then rebalancing to those benchmarks. I don't know if that helps answer.
Was that a speech?
All right, let's get back. Thanks, Jim. You got other questions on this?
Yeah, I just have one question. Either Rob, whoever wants to take it. So last year, we go back to March of last year, 10-year was about 560. So it's now jumped to an average between 1.5, 1.7, bouncing back and forth. Prediction is that we may see that in the third or fourth quarter hitting 2%. You know, what's our strategy if that happens?
To grab a minute on Mesereau's positioning?
So in terms of Mesereau's bonds, so that's your fixed income core manager, as I alluded to in my opening remarks, they are always going to have a tendency to adhere to the credit quality that's in place. Granted, now when new bonds, fixed income is coming to market and being issued, they'll look for opportunity sets to take advantage of some new offerings and bonds bringing into the portfolio. But to your point, as interest rates creep up, it is for that manager to be able to navigate and tiptoe through those kind of environments. That's why we pay them to manage the portfolio.
And at that point, you're having a conversation with Jim as to what our position should be.
Correct. So we're always going to adhere to our long-term strategic asset allocation. And as Jim mentioned earlier, we make tactical shifts here and there where we see fit. So we've done that in the past throughout 2020. We've made some modifications at the margins, always really adhering to the long-term goal of the plan. Because the reality is this plan should last longer than anyone here in the room. You know, this has a time horizon way beyond us all. So we need to kind of adhere to it in a long-term outlook. There'll always be hiccups. There'll always be asset classes, certain bubbles. You alluded to the real estate market. You know, there's a lot of talk of cryptocurrency, SPACs, NFTs. There's a whole new wave of investment vehicles. Not to say that they're not appropriate, but we don't get lost in the noise. We adhere to really what the board puts in place.
Thank you.
And I think it's important too for all of us that if you'd like I think you had mentioned, Rob, to look at the historical policy. So when we first started this in 2003, we had a 70% allocation that was the fixed income piece of it. And even though this doesn't say it, it says 3-month treasuries, but then we went to a 65% fixed income. All right, so now we're down to 34. What's our fixed income allocation now? 40.
Combined between the different types of bonds and cash at 45%.
So we've chosen to not immunize as much long-term liabilities. So we've taken on essentially some more risk because we're not necessarily selling the bonds. We're keeping them in order for long-term preservation. Likewise, when we look at the reallocation tonight that they're proposing, it's to get out of the MLPs, which we again just picked up about 3 or 4 years ago by bringing it to this board and saying this is an investment that we think we should look at and invest in, and we've done well with it. So it doesn't mean that the nervousness or the concern is definitely it's appropriate. We want to bring it up, and then we rely on these folks in Jim to come to the board and say, you know what, we should change the policy. So we're trying to stick to the policy. At the same time, when we have the allocation, let's say for the budget contribution in July, that may come in. That's all in cash. There's a decision then. Do we invest it, or do we let it sit in cash or some other vehicle and then adjust the policy later? So input is welcome because nobody's got the crystal ball. If there's something we should be doing, we want to talk about it. So I think it's appropriate, especially you folks are in the business. You're in the industry more than some others. It's good to talk about it.
Yeah. So so your expectation and comment about where the 10-year Treasury is trending. I'm in agreement with where that general trajectory is.
Yeah.
And what's very important too is to understand that as we have contributions coming into the plan, we've historically used those contributions as tools to rebalance or adjust the portfolio based on the set of information available at that time and those expectations. So as we're looking at this information in the summer, we're going to have more data on what the economic developments have been, how those second quarter earnings have developed. We'll start to see some further clarity on the Fed's policies. And that'll lead us to, the money that should go to fixed income and rebalance in the portfolio, if we give it to the portfolio manager to invest, or if we hold it back in the cash account to be more tactical and nimble as a tactical adjustment for how we deploy capital. But I think the interest rate environment will be headwinds for fixed income money managers on a short-term basis. And living in the fixed income markets is part of one of my roles in our business. It's been a very challenging environment, but having a little increase in yields makes everybody feel a little bit better right now.
Okay, thanks. I'm just going to have comments from Michael
Great. Thank you, Mr. Chairman. Michael Lepore. I just wanted to, I'm not participating tonight for the social distancing, but I just wanted to bring to everyone's attention towards the back of the report is a listing of all the fixed income positions. And one of the byproducts of matching liabilities is that we regularly have bonds maturing. And so you'll see there's a number of positions maturing annually for the next number of years. And of course, if rates spike up dramatically, there'll be nowhere to hide. But if rates rise gradually, there'll be regular cash flows from maturity into the portfolio that will allow the fixed income managers to reinvest those dollars at the then higher rates. Thank you.
Thank you, Michael. Okay, so I think we're okay with the police pension for now. We're going to talk about the rebalancing in a bit. You want to move on to the next one?
Sure thing.
Okay.
You could please pivot forward to the volunteer fire plan. Also, we'll be flipping to page 19. The volunteer fire plan resembles that of the pension, same allocation, as in 55% to equities, 45% to the fixed income. The only difference is due to the dollar size of this pool of assets. It is passively indexed in the fixed income bucket, and it does, although I have an active manager in the high yield space. So for the volunteer fire incentive plan, we have 64 months of data that equates to about 5 years and a quarter's worth. You could see the annualized return over that time period, 7.24 versus that of a 7.67. Total return right below that, north of 45% over that 5-year time period. But with that, we've been able to achieve that rate of return with about 9% less volatility as measured by your beta versus that of the policy. And also further evidence through your risk metric or annualized standard deviation at 8.83 versus 9.61. That really dovetails back to your questions earlier about how we've been methodical throughout all the plans in how cash is invested. That's why those numbers, when I speak to the volatility, the beta, the risk metrics, it's because of the timing of cash, not only received, but how we've implemented it throughout time. So it's smoothed out the experience of the plans. If we look at the summary of cash flow table at the bottom of the page, far left, last 3 months, we had a beginning market value of $1,393,074. Rebalancing activity equates to the contributions and withdrawals, leaving you with a net cash flow or withdrawal of $10,255 and a net investment change for the quarter of $47,346, bringing you to an ending market value for March 31st of $1,430,165. You can see as you pan left to right, your fiscal year to date in excess of $215,000 in net investment change, and then your 1-year number going back to March 31st of 2020, $339,204. If we flip to page 15, you'll see the experience of the plan at the rolled up level, as well as at the individual asset class. We also had some outperformance for the latest quarter, positive 3.41 versus positive 3.14. Your fiscal year-to-date return, positive 17.72 versus 17.92. 1 year, just shy of 32% versus that of a 34.32. And then dating back to your inception, 7.24 versus 7.67. Very similar return summary from the equity components, as well as the compressed returns in the fixed income and high yield markets. The market value of this plan as of the close of business as of Friday was $1,466,600. And that equates to an increase of $36,435 quarter to date, or a positive 2.55% from April 1st through May 21st. Any questions as it pertains to the volunteer fire incentive plan?
Charlie?
Same question, the percentage makeup in the portfolio is 55-44?
Same exact, so 35 to the core, 7.5 to the high yield. This one, although, has a 2.5% allocation to cash because the benefit payments are a lot smaller.
Okay, move on to the OPEB. Thanks.
And last but not least, the OPEB trust. If you could flip to page 20. So the OPEB trust dates back to July 1st, 2011 in this reporting template. We have 9 years and 3 quarters worth of data. You can see the annualized return over that time period, positive 5.88 versus 6.02. A total return of north of 74.5% over that time period. The OPEB trust having a volatility or beta metric of 0.84, so 16% less volatility in this pool of assets, and an annualized standard deviation of 7.1 versus 8.16. And with that, slightly positive risk-adjusted return, or alpha, of 0.07. In terms of the cash flows for this pool of assets for the quarter ending March 31st, you can see we had a beginning market value of $35,106,922, disregarding the contributions and withdrawals, as we did do a rebalance for this plan as well. You had a net cash flow or negative $9,562, but a net investment change of $918,884, bringing you to an ending market value of $36,016,243. And you can see over the longer time periods how the plan has done, most notably since the sharp decline last March. The one-year number, pretty stellar at earnings or net investment change of $5,458,543. And then going back to inception, you can see an investment change north of $7.8 million. And if we flip to page 15, you could take a glimpse at the plan. Here you could see the underlying investment vehicles for the OPEB trust. We saw some outperformance for the 3-month period as well at a positive 2.62 versus positive 2.56. Fiscal year to date, 13.84 versus 14.13. And your one-year number, north of 24%. So a vast recovery over that time frame. And then your inception return of 5.88 or 6.02. You could see here at the individual level, as Rob alluded to, how the U.S. equities have done quite strongly throughout the recovery, your large cap, mid cap, and small cap. And then complementing those, we have an allocation to the EFI, which is your international markets, the emerging markets, small component, about 2.5% of U.S. real estate, and then your Illyrian MLP, which is your energy infrastructure. And the bottom half is the ballast of the portfolio, which is your fixed income options. The market value for the plan as of last Friday was $36,635,144, which equates to an increase of $618,901, or a positive 1.72% quarter-to-date return for the OPEB trust.
Okay, any questions on the OPEB investment report?
Is this 45 and again?
55, 45.
55 and 40?
Correct.
Okay, rebalancing.
Any preference on which one we start with?
Start with the police pension.
Okay.
Which one was shown?
Police pension.
Okay. We'll start with the police pension for our recommendation for rebalancing. As you could see outlined on the spreadsheet, we've had a bit of outperformance throughout the equities. The overall allocation has remained in line with about 1% or 2% towards your equities, meaning your 55 to 45% allocation has drifted upward a little. You can see 57% in the equities, but at the margins, the underlying asset classes have stayed in line. The most notable, however, is the Illyrian MLP. So this is your energy infrastructure allocation, your gas, oil pipelines. These act as not only storage and transportation of these commodities. So if we look at the police reallocation, you can see it has a current weight of 6.4% versus a current policy of 5.25. That's a bit meaningful. That's about a 20% over allocation or appreciation in that individual asset class alone. So at this time, we've seen obviously the price of oil from last spring at about $33 a barrel to today at about $66 a barrel. We've mentioned price upticks and inflation, but we feel that at this time it'd be opportune to take some of the excess proceeds from this asset class, which is a bit overweight, and you can see about $342,000. With those dollars, we would be bringing our cash allocation to policy, which is right below that. It's a transfer of $282,000, and the remainder would be going to the only underweight equity asset classes, which is the emerging equities and small cap equities. We will not be putting any dollars to the fixed income mandates at this time, just due to the interest rate environment not being all that compelling.
Okay, questions on this? Somebody want to move it? Moved and seconded, discussion? All in favor? Aye. Okay, that's there's pension, and you're going to do the fire.
Okay. Similar case here with the incentive fire plan. Allocation remains that in line. You have about 56.6% in equities, so a little bit of appreciation, and that's just mainly due to the markets. However, once again, the Illyrian, although a smaller dollar amount due to the pool of assets, the allocation is also overweight. So we are looking to take some of the profits here, which is about $17,000, allocate $3,000 back to the cash, which will shore that up to target, and then allocate the remainder to the two equities that are underweight, which in the same sense is the emerging markets and the small cap U.S. equities.
Thanks, Luke. Questions on this? Moved by Robert.
Second.
Seconded by Jeff. Discussion? All in favor?
Aye.
Okay, thanks, Luke. And now the OPEB.
And lastly, the OPEB trust. You could see here that equity allocation at the bottom is about, disregarding, there's about 1.9% cash from dividends accrued in that account. So you have about 56.6% in equities, just a bit north of the 55% allocation. However, here as well, we could see how the Illyrian MLP, we're showing about $220,000 in excess over its allocation. So we ask that we reallocate that to move $21,000 to the cash, $56,000 to the Russell 2000, your small cap equities, and the remainder to the emerging markets equities at asset class.
Thanks, Luke. Good questions on this?
Move it, Joe.
Moved by Jeff.
Second.
Seconded by Harry. Discussion? All in favor?
Aye.
All right, gentlemen. Thank you. Appreciate it.
Thank you all very much.
Great seeing you.
Take care. Next, we'll move on to agenda item number 6, to consider request from the Board of Fire Commissioners and, if appropriate, approve an employment contract between the town of Brantford and the Assistant Fire Chief Gary Bloomquist. Welcome, Margaret and Chief.
Thank you. Good to be here.
Good. Would you like to address this, Margaret?
Sure. Let me start. I'm sure the chief will be able to add some additional comments. The contract before you is for the assistant fire chief position, which has already been approved, of course. And we have in front of you a very similar contract that we've had with the other assistant fire chief contracts, except the salary, which has already been approved by the RTM, and the fact that there is no comp awarded in this contract. I think that's pretty important. In exchange, though, we have given the fire chief the option to allow the assistant chief to work 6 days during the holiday period, if necessary, to make up for some of the difference in the salary relative to the comp time not given. We think that's reasonable. And this has sort of been coordinated with myself, the fire chief, as well as the first selectman. And didn't know if you want to add anything.
No, I think it was a fair negotiation. There was a little bit of back and forth, and we came to a reasonable accommodation for some of Mr. Bloomquist's requests. With regards to the holidays, our assistant chief and myself included, but more so the assistant chief, there's times where the guys work 24 hours a day, 7 days a week. Our schedules are varied and sometimes complementary to that, and this allows him the option which most of the union firefighters enjoy, so I didn't think it was unreasonable to grant that request. And I hope you'll find it to be a fair contract for everybody.
Thanks, Chief and Margaret. Questions from the board? Harry?
Both chief and the assistants, they're basically on call 24/7.
Yes, sir.
365 days a year. And so, in one instance, he would be available to work 6 days.
So in lieu of taking usually the minor holidays, he would prefer to work that day when the crews are working. They, it depends on various projects and things he has going, and use that holiday either at another time or cash it in similar to the union.
Well, wouldn't one of you be working that day anyways?
Not necessarily. He would normally be off on that holiday. So he has the option of either taking it off, saving it as a day off in some future day, or working it and getting holiday pay, so to speak.
I lost again because when I asked you 24/7, 365 days a year.
Yeah, correct, but we get holidays off. So, we would get...
You get a call, there's a major issue.
Right.
So he'd be performing other duties. He's also a medic?
No, essentially he would, instead of taking...
Because I was reading that.
Instead of taking the day off, he would work that day, physically work, instead of being off on a holiday, and he could either save it and use that at some future date, or he could cash it in because he doesn't get overtime or any other compensation for working more. Even though we work 24/7, 365, our salaries are based on a 40-hour work week, give or take.
So is this a special consideration?
It's a similar benefit to the
other fire department?
To what the union fires get. And when we did the salary study, and I think Margaret can back this up, our assistant chief is paid a little bit less than surrounding communities of similar size. So we try to find ways to, throw a bone to him and give him a little more flexibility, and I'm okay with that. He works very hard for me. He's been a tremendous asset already. He's been working in this position for about 6 months right now, and that would be my recommendation to.
This is tied to the fact that you took the comp time out of the contract. So this is I think the prior contract had unlimited comp time in it. So this is a way for him to not necessarily have comp time, but to work the holidays at straight time.
Correct.
Even though he's an exempt employee. And so it kind of calls that out. So I guess it's a bit of a trade-off. So it's, if you call it special, it's different, but it's bit of a hybrid, but it's a change to our benefit from the previous contract, I think. But
we call it our creative approach to coming to like minds.
Yeah.
He's gone from the union position to non-union position.
Correct.
Where he's enjoyed that benefit, which he no longer have.
Right.
And so we feel, after you did your study at 105,000, under what the market is, and this is an accommodation to bring him to that level that others are at. And is there a cap on that?
Six days.
6 days, if he so chooses. So he might decide to work 4 days or 0 days, but it gives him the option to work 6, which...
And if he doesn't take those...
he gets the holiday.
Does that go with him?
No.
No, it's everything's within the fiscal year, and...
he gets the holiday. Yeah. If he doesn't work it, then he gets... If he works it, then he gets the holiday later, and he gets paid straight time.
But he's not able to bank that the rest of the year?
No. There's a provision in there for some vacation carryover, but it's limited to 10 days, I believe.
That's correct.
Something like that. So it's
definitely correct.
Joe.
I have a question.
Charlie and then Jeff.
Does this board just approve, or do we become aware?
Is this the, what is this, Jim? This is not, this is our approval, actually.
It's over 10,000.
Yeah, this is an approval.
Oh, because of the...
Yeah.
So the Board of Selectmen will then act on it, but prior to the board acting.
We're mandated. What's the statute on that?
4210.
Yeah, 4210. So this is similar to that, where it's, we don't negotiate it. We unless we have an issue with it, then it comes through here for a review and some level of approval. But we're not authorizing funds on it. because we've already approved those in the budget process. Jeff?
Thank you, Joe. So I did review this also, and I think the compromises are well taken, and I would second this, but I also like to state that I think Brantford's very generous in their salaries, and this is a good contract for the assistant fire chief. I'll second it, Joe.
Okay. Let me ask you, who moved it? You did, thanks. One of those days. Thank you, Jeff and Robert. And additional discussion on this? All in favor? Aye. Thanks, Chief. Thanks, Margaret.
Thank you.
And Margaret has more business before us here. Item number 7.
Just briefly.
Go ahead. Why don't I read these through, and then you could comment on them, okay?
Sure.
So this is a request to consider and, if appropriate, approve a request from the Human Resource Director for the following fiscal 21 budget transfers. And I'll read through them. There's actually four sections on this. So the first one is the general fund transfer from contingency 13,345 and going into various wage and salary accounts and some accrued payroll expenses in order to, this is for with regards to union contracts. Is that what this is?
Yes.
Yes. Okay. So that's the first on the general fund, and I guess I'll read through all of these here. So it's 13,345 going into, let's see, I'm going to call it 41130 account, 1402, 41190, $1,702, 4120 wages for HR, $183, 4210 for police, $541, 4250 for building department, $915, account 4350 for engineering, $879, 4420 for senior center, 2956, 6020 for wastewater. I'm sorry, that's Willoughby Wallace, $423, 4130 for accrued payroll, $6, another accrued payroll for $7, another accrued payroll for $1, another accrued payroll, you're killing me here, another for $3, $4, a $4, $12 for accrued payroll, and another $2 for accrued payroll. Transfer out to our friends at the Animal Control Fund for $1,632. Sewer utility, $321, and Human Services Fund, $2,351 for a total of $13,345. That's the first one. That's the longest one. The second one is regards to animal control, transfer in of $1,632, and then the authorization to expend for $1,627 on wages and salaries and $5 on accrued payroll. And the third resolution is for the sewer utility fund, and it would be a transfer in of $321 and an increase in the appropriation of $320 and $1 for accrued payroll. And then the corresponding, then you have the Human Services Fund, transfer in of $2,351 and increase in the appropriation of wages and salaries $2,342 and accrued payroll of $9. So, and then we have resolutions that go with those, but for now, I will take comments on that from Margaret.
Well, I can just really address the first one. The others are to be addressed by my colleagues in the finance department, who worked very carefully with me on these numbers, so I appreciate their assistance. But the first one is very simply put, is that, as you might recall from last year, or recently, yes, last year was December, we approved the Brantford Employees Union contract. This is the $13,000 is a retroactive adjustment associated with that going back to July 1st that was not in this contract for this fiscal year, or in this budget for this fiscal year. So that amount of $13,000 is really just a retro payment that's already being paid out on the retro that we gave, of course, in December when we approved the contract retroactive to July 1st. That contract, as you know, has no overtime in it, straight base salaries, and the only other minor expenses or changes in that contract really had to do with the employee contribution portion.
Thanks, Margaret. Questions on this transfer of $13,345? Somebody want to move this?
I'll move it, Joe.
Moved by Jeff. Seconded by Harry. Discussion? All in favor? Aye. Thank you. Next is resolved that the Board of Finance recommends to the RTM a transfer of $1,632 to the Animal Control Fund to fund salary changes pursuant to the collective bargaining agreement for the Town of Branford Employees Union. This transfer will increase the fiscal year 2021 budget in the Animal Control Fund from $367,026 to $368,658.
Move it, Joe.
Moved by Jeff. Second by Charlie. Discussion? All in favor? Aye. These are all part of the same negotiations. Thank you. Next is resolved that the Board of Finance recommends to the RTM a transfer out of $321 to the Sewer Utility Fund to fund salary changes pursuant to the collective bargaining agreement for the Town of Branford Employees Union. This transfer will increase the fiscal year 2021 budget in the Sewer Utility Fund from $4,606,967 to $4,607,288.
I'll move it, Joe. I'll second.
Moved by Jeff, seconded by Charlie. Discussion? All in favor?
Aye.
And the next one is resolved that the Board of Finance recommends to the RTM a transfer out of $2,351 to the Human Services Fund to fund salary changes pursuant to the collective bargaining agreement of the Town of Branford Employees Union. This transfer will increase the fiscal year 2021 budget in the Sewer Utility Fund from $1,653,902 to $1,656,253. Moved by Victor. Second by Jeff. Discussion. All in favor? Aye. Thank you, Margaret. Thank you, gentlemen.
Thank you all.
Okay. Item number 8 is to consider and act upon the following proposed resolution. Resolution amending a resolution appropriating $2,895,000 for the renovation expansion of the Branford Animal Shelter and authorizing the issuance of $2,895,000 in bonds of the town to meet said appropriation and pending the issuance thereof, the making of the temporary borrowing for such purpose. And that's as far as I'm going to read for now. The purpose of this amendment was to increase the appropriation and bond authorization from $2,895,000 to $4,595,000 and ratify and confirm and adopt all prior authorizations and resolutions in connection therein. Welcome.
Hi, how are you?
Okay. I'm in shock from the numbers, but I'll let you start off, and then I think Mr. Cosgrove would like to make some comments.
Yeah, actually, Joe, if you don't mind, if I could just provide some...
Defer to the first selectman?
I'm sorry, what was that?
I said you're deferring to the first selectman?
I absolutely am.
Okay, thank you.
Thank you. No, I appreciate that. So as you just read the resolution, this board, as well as the RTM, approved the resolution several months back of 2.895 for the animal shelter project. I think it's important to note since that time that the project from the original appropriation did not increase appreciably or minimal at best in any scope or scale. The project that was we asked for is essentially the same project that the town ultimately went out to bid for. Also, since that time when we received the appropriation, the town did go through a competitive process, an RFQ process, to select a construction manager and has since engaged enterprise builders for the project. Prior to going out to bid, I would say I did have some concerns. I think we're all aware of what's happening out in the market currently, the uncertainty. and wondering what that impact would have on the bid results. This past Monday, our CM in the town had conducted a competitive bid process for all the various scope packages. And I think I share the same as many in this room, and as I could say, the other stakeholders, we were all, where I may have said there was some concern, I think we were surprised on the variance between what we had appropriated to what had come in through the budget, through the bidding process. And my initial concern was to, or position was perhaps put a pause and go through everything and see what went wrong. And doing that, I actually going through, and again, it was pretty much every scope of work, I think, exceeded what was initially budgeted. It wasn't just one particular area, one thing driving it, everything from site work to building envelope to mechanicals. Further reflection, I think there's safe to say there's a number of contributing factors to this variance. I think, of course, maybe the number was off to begin with, but I think also you have to understand the full process. I think everybody in this room is aware of the volatility that's occurring both in the commodities, building materials, labor markets, but also when we go out to bid, we're asking those responding to bid to hold that number again, for 3 months before they even sign a contract. So even with the uncertainty and what's happening right now, they're obligated to hold that for 3 months before they even have a contract, and they can start procuring material for a project that's going to last 10 to 12 months. So I think you could start to get a sense of how that can play into the results. Given the fact that I said there's various, before all the stakeholders, but as we know, this project has a wide range of support throughout the community. The commission has just gone through a very successful capital campaign where they not only met, but they exceeded their goals. I think they've had over, and they could speak, I see Marilyn, the chairman of the Animal Shelter Commission, and Laura can speak to that, but I know they had over 1,100 donations or contributors to the capital campaign. We're all aware of the support that they have within the town, and as well as the town of North Branford that they serve as well. For that reason, I thought it was important to bring this, in the spirit of transparency, to bring this forward at this point for the board to consider. I wouldn't expect action tonight. However, I think, as I mentioned, the bids were opened on Monday. The construction manager, Enterprise, has been reviewing those and going through it and put a budget together, or project cost together, working with our town engineer based on those results. I would like the opportunity to have the project team to come before this board and perhaps speak to what they're seeing in the market, what they're seeing in the industry, and what's driving this cost of this project. Therefore, giving the board an opportunity to consider and perhaps make a decision at that time.
Thanks, Jamie. Before I turn it back over to you folks, Jamie and I did talk on the Friday and over the weekend with regards to the numbers and the disappointment in the fact that this was so far over budget. We're basically close to 60% over on the expenditures, up $1.7 million from the estimated 2.895, and so again, we're looking for answers, and hopefully we'll get some tonight, and we'll also get some at probably a special meeting somewhere down the road. I didn't think that the board would be acting tonight, but as Jamie said, we wanted to bring all the information that we had currently before the board and before the public so that we are as transparent as possible to figure out what occurred, what we can do. There's several options that we will have in front of us that will be shaped out over the next week or two or three or whatever. In the meantime, why don't we hear from you two folks, and then I'm sure the board will have questions.
So, thank you. Like Jamie said, the number that came in was obviously surprising to all of us. None of us had anticipated it being as high as it was. But on some good notes, I can let you know where we are as far as fundraising and what's going on with that. As of today, we have raised $1,254,471 in pledges, donations, and grants. 1,257 people or organizations have contributed, with the smallest donation coming in at $2 and the largest donation coming in at $175,000. Approximately 60% of those donations, pledges, and grants have come from outside of Brantford. And so that includes every place close to us: Guilford, Madison, East Haven, all the way from California, Hawaii, Florida, Texas, you go on and on. We anticipate raising quite a bit more money, understanding now that the number has come in the way it has, and we're planning fundraisers in the future, and we are hopeful to raise a significant amount more money towards this project.
Thank you, Laura. Don't you have an event coming up?
We do. We do. We have...
Tell us about that.
So we anticipated actually breaking ground towards the end of June because we thought that's what would be happening. So we were having sort of a celebration breaking ground fundraiser on June 24th at the Pine Orchard Yacht Club. We anticipate actually at that event we're going to raise quite a bit of money as well. So we hope all of you will come.
Okay, thank you, Laura. Before we turn it over, Marilyn, do you have comments that you'd like to make?
I really don't have any specific comments other than that I'm grateful to the town for everything that they've shown support for this project. It certainly has been something that we've been working on for quite some time as a commission, and we're really very anxious to move it forward. It's a long time coming, and we hope that we have your continued support to try to do that. It's really important at this stage. I mean, our shelter needs it, our community needs it, so I hope we can eventually get there sooner than later.
Thank you. All right, questions from the board. Victor, you had one?
How many square feet is the existing building that's going to be remodeled, and then how much is going to be added?
I believe the existing building is somewhere around 2,400, something like that, and we're going to about 55, 56.
Adding 55 or?
No, so we're like doubling the size of what we're in right now.
So from 23 to 55, roughly?
About that, yeah.
I think it was 6,350 is what the numbers are. 66,350 estimated square feet is the scope of the project.
I believe you're correct. I believe you're correct, Joe.
Thank you. Other questions, Charlie?
I just wonder, why do you think you're getting so many contributions from out of state?
I think that people, follow us on Facebook. I think that we actually have an Instagram and a TikTok account. So we have people following us from all over the country. So we have people following us from all over the country. We have people that have lived in our state or our community that have moved elsewhere that still continue to support us. I think that people genuinely care about the welfare of animals, and they understand that, the kinder we are to animals, the kinder we are to other people. I think that we're a little bit of a unicorn as far as municipal animal control goes, and people really appreciate the work that we do and want to see it happen in other communities. So I think there's a multitude of things playing into it.
I mean, I'm surprised though that the town of Brantford and North Brantford, haven't contributed more than 40%.
Charlie, thank you. You can turn off the mic. I'm teasing.
Just the checks in the mail.
So Joe,
I'm surprised, but that's interesting. So let me just do a recap. Good old Mr. Finch, our great finance director, and his team have put together, I'm going to ask him to keep some of his powder dry until we know really what the final numbers are, but Jim did put together a nice memo that kind of, and I'll let him address it, but it does talk about the gross amount of the project. Original was 2.895, and that would have us, the town, potentially bonding or have some type of final indebtedness of $2,040,000. And now with the scope as it is right now, with the cost at 4,595, the town will be bonding $1,230,000 more. Now there is, I'll let Jim address some of the finer pieces of it, but essentially, you're up 60%, and that's really, it's $1,230,000 of additional potential indebtedness, and so that's where the conversation is. Jim has obviously looked at the North Branford contract, which you're referring to, Charlie, and the town's contribution, but right now it's probably a little early to really figure out exactly what we're going to do until we understand that, in fact, there's no other options of either go or no go. And that's, we're fortunate that the town is financially in good shape, but it doesn't mean that we're willing to accept a 60% increase in a project without good scrutiny. So, Jim, you had done some, you want to provide a little more information? I know it's still somewhat premature as to where we're going to end up with this.
Yeah, there's a couple different ways to take that. Yeah, basically, as you pointed out, right now we're dealing with gross numbers of $1.7 million increase. The additional donations from $730,000 to $1.2 million is also a positive variance of $470,000. So we're looking at about $1,230,000 in additional net debt issuance requirements, and there's a lot of different ways to approach that. In its simplest sense, we could just borrow another $1,230,000. And Jamie talked about the various stakeholders, and there's another stakeholder, the town of North Branford. And we're fortunate that between myself and the North Branford Finance Director combined in our communities, we have probably 46 years. And so I did inform him of where we were at, and said that we were looking at potentially more money, and that it might make sense to look at some of the agreements that we have. And one aspect of that essentially is that, on the capital side, they essentially reimburse us for any money that we would spend. And up until this point, we've been dealing with net numbers. So for example, in this example on my sheet, if the project was $4,595,000 and we issued debt of $3,270,000, they would pay us over the life of the bonds if we issued debt. One of the things we talked about was what we had done some years ago with the sewer agreement, and in the sewer agreement, essentially what we did is, you may recall, some of you, when we had a large capital project for work, various capital projects for work done at the plant, I believe at that time it was like $6,035,000. Money was taken from the sewer utility fund balance, and while that's good for the town, and you may recall some of the schedules we've shown when we did the large sewer increase about 1.5 years ago, we always recognize that that has an impact on our counterparties, North Branford in this case. And so if we ever go down the road of potentially looking at offsetting some of this debt increase with an appropriation or an assignment of our unallocated general fund balance, we have to be very cognizant of how that impacts North Branford. And again, I don't want anybody to anchor to this number, but I think it works well for illustrative purposes. And that is, if we said, okay, we're going to take $1 million of the $1,230,000 out of not a fund balance, and the shelter was to raise another $230,000 on top of it, let's say. So in that case, you would have basically wiped out the net debt difference. Well, the $1 million, then North Branford would then have to come up with their share of that, which would be roughly 30 to 33%, $330,000, which would have an impact on them because that's not something that's planned for in their budget. So one of the things that we'd have to work out, and there is a history of doing this, as we did with the sewer utility fund, is we'd have to basically come up with terms, so that they might pay us back over a 3-year period or a 4-year period, etc. So I think it underscores the point that we as a community, Animal Shelter Commission, Board of Finance, RTM, our various stakeholders, our donors from Branford and beyond, and North Branford need to kind of coalesce around a strategy and then present that strategy back to the board. But we are a healthy community, and North Branford's relatively healthy. Doesn't minimize our shock at the $1.7 million, but I think that if we put our heads together, we could come up with some options to kind of soften this. So.
Thank you, Jim. Questions from the board?
Just a comment.
Harry.
One of my clients is one of the premier New England commercial building supply. So this number unfortunately didn't scare me that I saw, because if you're dealing with any wood products, they're almost priced daily if you can get them. I call it sheetrock, which is the old term. We call it wallboard today. You can go through every part of a building and who's added 15, 30, some particular items, 200% increases. It's crazy. Then dealing with labor, getting the right people. The general contractor has to go to the subcontractors. We're going to be saying, I had to do a 20% increase in wages. I can't just eat that. So I think hopefully we'll be able to adjust this down, but we're not going to see any miracles here. I mean, that's my opinion early on, almost like Jim's, early on. And my thought is to somehow move forward with this project. Because if we stop now, it may go really indefinitely.
Thank you.
But I think it's the problem of the cost of doing business today. Yeah. I got caught with a building project in the 80s, early 80s, that was similar to this, but not close to this. And it happens, it's...
Yeah, Joe, I concur with Harry on this as far as the building supply issue, but I think as things open up and the supply lines will open up, it's been a problem. You can't get materials. You can't, we have the Suez Canal, that was a problem. So I really believe that coming towards the end of the year and the first quarter of next year, things will come down to normal, or somewhat normal. But I don't know, Mr. Chairman, maybe we need a motion to take no action this evening on this particular item.
Yeah, I think I'd entertain a motion to table it at this point.
So I'll make that motion to take no action this evening on this.
Okay. So a motion that's been raised. Second by Victor.
Can I ask a question?
Charlie, additional
Did I hear, though, we have a 3-month fixed numbers contract?
Well, I believe we had the contractors had to hold their bids for, I believe it was 90 days. Typically, we do 60. It's 60 to 90. I'll shoot you an email tomorrow just to confirm that.
And how far are we into that?
No, so we just opened up the bids on the 17th.
Okay. I agree, though, with what Harry said, because I'm doing a small project, and my consultants are telling me, man, you got to move now because things are going up.
Thanks, Charlie. What I anticipate is that there's an expedited review going on at this point in time we'll be in touch with I'll be in touch with the first selectman and the finance director, and in some fashion, I expect another special meeting to be called in the next couple weeks or sooner. Okay, that's kind of where we had left it, and I think for now that's I think the best we could do.
Thanks,
okay, and
it's a fair approach, Joe.
Okay, thank you. And so a motion's been made and seconded to table. Jamie, you have other comments?
I was just going to say, I did check. It is 90 days.
Okay.
To Charlie's one.
Yes, they have to hold for 90 days. 90 days, okay. Okay, other discussion? All in favor? Aye. Thanks, ladies. We'll be in touch.
Just so you all know, we moved today. So we're living at the Canoebrook Center, the old Canoebrook Center. Okay. So if you need us, we'll be over there. We won't be there really until next week, but we're living there right now.
Okay. Thanks. Take care. The last on the agenda is to hear an overview of the fiscal 2020, the fiscal 21-22 budget from the finance director and to set the mill rate for fiscal 21-22. Jim has provided us with some information. Jim, you want to go over your memo?
Sure. It's probably good to end the meeting on a small increase. So with that, I'll talk about the budget highlights for next year, starting in July. So the RTM, as you folks are well aware of, and members of the public are probably casually aware of, essentially can decrease the budget in total that you recommend to them, but they can't increase it. So that's what they typically do, is they meet in various committees and they go through the budgets and they make their adjustments. So in the memo, I've outlined two items that were increased: information technology communications by 30,000, and then in the capital, addition of electric vehicle or vehicles for $26,000. They offset that with a reduction of 100,000 to the Board of Education, 100,000 from contingency. The police department, they reduced 2 vehicles and the setup for the 2 vehicles. The net reduction of that is 258,000, which actually brings the mill rate down from your recommended mill rate of 29.52 to 29.45. If you do it on a year-to-year comparison, it ends up being a slightly over a half a mil, or a 1.82% increase, which is $182 on a $10,000 tax bill. There are no proposed revenue changes tonight, and so your responsibility at this point is to set the mill rate. So you would be setting a mill rate for next year at 29.45, and there's a resolution that basically, if adopted, will effectively set the mill rate for next year.
Thank you, Jim, for that. Questions on the memo from Jim or the detailed overview of the budget that was also provided?
No question.
Victor?
Where is the information technology going up?
That's the IT department. That's data processing. Debbie Karen. Yeah, it's the IT. It's Debbie Karen when she comes and presents her budget. So that's the department.
I guess what he was asking is what purpose is it? The 30,000.
Oh, sure. Okay, I'll address that since I was part of that discussion. As you recall, when the Board of Finance adopted its budget, there were some things that were pre-funded, items that we thought we could pre-fund. There was technology and communications in the IT budget. And then essentially, I must have misunderstood my conversation with IT, and that 30,000 was not communications equipment, it was communications as a service. So we couldn't pre-fund the service, whereas we could pre-fund equipment. So that got fixed at the RTM level. So the RTM did not approve that reduction in the current year, but it needed to be added to the IT budget for 21-22. So they basically took it out of contingency. So what will happen if you look at the 2 years side by side, another $30,000 is going to float to fund balance, another $30,000 comes out of contingency in the new year.
So similar to what happened last year, or something? This is a year-to-year service? Service?
As it turns out, it is. Now, in a prior year, we did actually buy communication technology that was actual physical technology, which was the voice over IP phones. So I thought this was an extension of that, and because we were talking about that in the context, and as it turned out, it was not. So basically, it made things whole.
Thank you, Jim.
Yep.
You all set, Victor? Other questions, Charlie?
On the decrease of 100,000, you know, in contingency, like I thought you gave us an explanation of the number during our budget session.
I did.
So when you went to the RTM, you weren't successful in defending it?
Well, that's a harsh way of putting it, Charlie. Well, I think. Well, if you let's sort of look at the trade-offs, right? So out of the 100,000 for contingency, you can make the case that 56,000 of that went back for communications and the electric vehicle. The debate around contingency is probably more art than science at the RTM level. And Don Conklin and I affectionately refer to those conversations. Really, no one can prove that the other person is right or wrong until the year ends, right? Because by its very nature, it's an uncertain number that you're putting forward. And so, you know, you got sort of your known contingencies, your union contacts, et cetera. And then you have, you know, your unknown contingencies. And, you know, whether the number is, you know, I'll just throw a number at you, whether it's, you know, 450, 350, 300, you know, those are things that you don't know until the winters are over, the storms are over. You had people retire and you had buyouts to pay out their retiree sick time, or you get embroiled in a bunch of legal dilemmas, which, as you know, are response-driven, right? And so you end up having to add more to the legal account. So it's not one of those things that has an immediate consequence, which I think always makes it a delicious target for people looking to cut that. It's like, well, we cut contingency. You didn't lay anybody off. Not something that somebody couldn't buy. That's where I think the nature of that is, and it's not acrimonious. It's a somewhat good-natured. I mean, I know it's coming. You know, if I was Johnny Carson, I could probably say, okay, contingency's got to get caught. A police car's got to get caught. You know, it's the things that typically happen. It's part of the process. It doesn't surprise me. At the end of the day, we get a budget that's responsible. We get a budget that maintains our liabilities, invests in the future, maintains our plant and equipment. And we manage our debt well, as cited by the rating agencies. We have tonight $36 million in an OPEB trust that's 9.5 years old. The area towns are just starting theirs a year and a half ago. So on balance, yeah, we lost 44,000 out of contingency, but I can live another day.
So did he answer your question?
Gives me ammunition for next year's budget.
That's what I figured. Okay, thank you, Jim, for that. You did. I'm sure you did well at the RTM, along with Jamie and others. So, other questions? So I will read a resolution here. Resolve that the Board of Finance establish a mill rate for fiscal year 21-22 at 29.45 mils pursuant to the budget adopted by the representative town meeting.
I'll move it.
Moved by Victor, second by Robert. Discussion? All in favor?
Aye.
Aye. Thank you. And with no other business to come before the board, I will entertain a motion to adjourn.
So moved.
Moved and seconded. All in favor? Aye. Thank you.
This program was brought to you in part through the support of the Town of Brantford. Watch town meetings and other videos on demand at BrantfordTV.org.